Welcome to Forward Thinking, the podcast from Fox Williams. This episode features financial services partner Seb Sayer and employment associate Connie Shaw discussing all things non-financial misconduct. They define what NFM is, the FCA's new approach to NFM, what firms should be doing ahead of the new rules, and more. We hope you enjoy this episode.
What is non-financial misconduct?
Non-financial misconduct, or NFM for short, is anything that violates standards of professional behaviour and impacts upon a firm's culture and reputation. NFM includes behaviours such as bullying, harassment, sexism, racism, discrimination, and any other form of sexual misconduct. Why is it important for regulated firms?
The FCA is looking to improve regulatory outcomes, having frequently noted a correlation between poor firm culture, NFM, and instances of financial misconduct, such as market abuse. It has therefore adopted new rules and guidance intended to tackle NFM, and these come into force on the 1st of September 2026. This signals an increased supervisory scrutiny in this area. So, what is actually changing for firms and which sectors will be affected?
This change impacts all firms with Part 4A permissions under FSMA. It's relevant to all individuals subject to the FCA's senior management and certification regime within those firms, which includes senior managers, certified staff, and conduct rules staff. So there's about 45,000 firms in the UK, such as asset managers, brokers, credit firms, mortgage firms, and insurance intermediaries. The change is also highly relevant to banks and insurers. They don't necessarily apply to other firms regulated by the FCA, such as e-money, electronic money institutions. The change is that for the first time, the regulators have provided a clear regulatory definition of non-financial misconduct and have set out the adverse personal regulatory consequences of acting in this way. The FCA has done this by introducing a new rule within the COCON section of its handbook, which makes it clear that in a work-associated environment, that certain types of behaviour, such as an NFM, are within the scope of COCON. That is specifically conduct that has the purpose or the effect of violating a colleague's dignity, or of creating an intimidating, hostile, degrading, humiliating, or offensive environment for a colleague, or conduct that is violent towards a colleague. So really, that's shorthand for bullying, harassment, sexism, racism, and physical violence.
And can you say a bit more about the key frameworks in the Code of Conduct and Fitness and Propriety?
Alongside the rule change, the FCA has introduced extensive changes to its guidance in COCON. It's made clear that if an individual commits non-financial misconduct, then they will have breached either Individual Conduct Rule 1, the obligation to act with integrity, or Individual Conduct Rule 2, the obligation to act with due skill, care, and diligence. The FCA has made clear that only serious misconduct will amount to a breach of the rules, and have outlined factors that firms can use to judge seriousness. They've also made it clear that these changes aren't simply about those who perpetrate NFM. They're also about stopping people being bystanders. The guidance makes clear that managers who unreasonably fail to prevent NFM may themselves breach the conduct rules. In order to prevent an accusation of being a bystander and breaching, managers can take reasonable steps, and the guidance sets out what some of these reasonable steps are. These are things like intervening to stop inappropriate behaviour, taking complaints seriously, providing a safe environment for raising concerns. What reasonable steps should be taken is really something that managers should be thinking about taking legal advice on. The advice at the FCA have also expanded the guidance in the FIT section of its handbook to explain how NFM and private life conduct may be relevant to fitness and propriety assessments. This is relevant to senior management function holders at firms and those certified by their firms as fit and proper. The guidance makes clear that NFM committed in someone's private life can be relevant to whether they are fit and proper at work, but only where there is a material, which means more than a remote or speculative risk, that the individual will breach regulatory standards or undermine public confidence. So conduct in private life that would breach regulatory standards if repeated at work, for example, violence or sexual misconduct, will be relevant to someone's fitness and propriety if there is a material risk of such repetition. So this is highly relevant for individuals as well as firms to understand and to take action on. What have the FCA said about social events?
So the FCA have provided a helpful table in the back of the guidance in the new rules, which sets out where conduct outside of the office may be sufficiently closely connected to work to engage COCOM. This would include misconduct at training events, award ceremonies that are work-related, or workshops organised by clients. For example, misconduct by a person in relation to a co-worker at a social occasion organised by their firm will be within scope of COCOM. In contrast, misconduct by a person in relation to a co-worker at a social occasion organised in their personal capacity will generally not be in scope, but an event organised by a manager may be within scope, taking into account the fact that their direct reports may feel obliged to attend. Similarly, an after party which takes place after a firm event at a separate location or venue may be within the scope of COCOM if it is a continuation of the first firm-related event, or if the conduct started at the work event and continued into the new venue.
What have the FCA said about social media?
So the FCA have confirmed that firms are not required to actively monitor employees' social media, but that it may be relevant to their fitness and propriety if it indicates a material risk that they will breach regulatory standards and requirements. So this will include serious incidences of NFM on social media, for example, threats of violence, clear involvement in criminal activities, conduct that shows a material risk that they will carry out bullying or harassment at work. This means that firms are not required to investigate trivial, implausible, non-material allegations or allegations that would be irrelevant to fitness and propriety, even if they were repeated at work. The question of whether social media account activity will ever fall within the scope of COCOM will depend on where and how that social media activity is carried out. So, for example, whether the material is directed at a fellow member of the workforce, and if it is, that points towards the conduct being within the scope of COCOM, whether the content of the social media is work-related, whether it's issued from a work device, or if it takes place over the firm's systems, all of which will likely be within the scope of COCOM.
How should firms prepare, particularly with regard to adjustments to internal policies and processes?
Firms will want to conduct a wholesale review of all of the policies which they consider will be relevant to NFM. For example, their disciplinary policies, whistleblowing, dignity at work, any social media policies, to ensure that NFM is clearly embedded within those policies. In particular, any policies that touch on rule breach identification will want to make sure that a wider range of conduct is brought into its remit so that NFM is being identified for the purposes of assessing breaches of COCOM and relevance to F&P. Firms will also want to consider and embed NFM into any regulatory reference process to make sure those incidents are being considered in that process. Firms may also want to stress test some of the procedures with a hypothetical scenario involving NFM to effectively ensure that incidences of NFM, when they are raised, are being appropriately and promptly escalated to the right people within the organisation. It's also worth firms trying to strengthen any existing reporting mechanisms they have in place, like whistleblowing channels, to make sure that employees actually feel safe raising concerns of NFM and that they will be treated confidentially and that they won't be subject to retaliation for raising those concerns, which will give rise to employment law risk for victimisation, for example. And it may also carry conduct rule breach risk on the part of the manager if they are seen to carry out retaliation in relation to a concern of NFM being raised. We're advising that firms provide targeted training in relation to the new rules to ensure that all conduct rule staff understand when workplace behaviour can have regulatory consequences and what will and will not be acceptable in the firm's or organisations in terms of standards of conduct at various work-related events. It's also worth reminding employees that their elements of their private life may be relevant for their fitness and propriety and may fall within the scope of conduct rule assessments going forwards. Finally, we'd advise firms to take good record of any assessments of conduct rule, disciplinary or fitness and propriety procedures in relation to NFM to ensure that the decision making in relation to non-financial misconduct is being consistently applied across your organisation. Given the potential ramifications of a report of NFM being made to a regulator in relation to an individual, there are likely to be more challenges to processes of this nature going forward, particularly if it's something that's mentioned in a regulatory reference. So it's vital that firms have robust, sort of documented investigations that will withstand those potentially legal challenges.
Thank you for listening to another episode of Forward Thinking. We hope you found the discussion useful. If you have any questions, please get in touch via the Fox Williams website. All details will be in the episode notes below.